Good morning, everyone. Welcome to Hit the Bid here on January 11th. This is Ty Robbie here through Week 2 Market Watch. Today we're going to run through our charts and see what happened across the markets over the last week and see what we have to look forward to as we head into Week 2. So let's jump right in and get started. First on the board today, we got our February live cattle. Do have a quick note here. We are starting to see some of this volume roll out of this February contract and over into April. We'll continue to monitor that throughout the next week or two here as rollover takes us into this April contract. But at the moment, we're going to continue with this February contract to start off the week, and we'll keep an eye on that throughout the next week or two here. Last week, we did see live cattle prices slowly slip lower. Prices did open up here on Monday and Tuesday, putting some pressure up on that 237.5 level before slipping on Wednesday. Thursday and Friday's action pulling back here and finding some decent support right around the 233 line. Nice bounce there on Thursday off of that level before, and then Friday's action settling back down here to it. We did see this market show good support down here near 233. Not quite the reaction as we saw there on Thursday, but continuing to see the bulls hold the line and defend that 233 mark. The uptrend still remains intact. As we head into the next week, we still have a pretty good upside potential here for the bulls. Last week, we saw this equal distribution of volume here, showing we don't have any real sharp breaking points. As long as the bulls are able to defend 233, we should see them continue to gather support here between 233 and 234 and push this market back across this range up there towards 237 to 37.5. Bids above last week's high up there at 237.5 should continue to push this market up into the 240s and keep this uptrend moving higher. Bulls remain in charge here, and we should see this cattle market continue to rally. That's the bullish scenario. However, if we do get some offers below 233 early next week, we could see this thing snap back down here into this multi-week range we were stuck in throughout the late part of December and this breakout here that we saw at the beginning of the year. Look for offers below 233 to take this market back down towards our major moving averages. We got our 20 and 50-day moving averages still trading below current price levels, and each of these levels should act as good support over the next week. This multi-week range we traded in here for about 3.5 weeks. We'll see good support anywhere down here between 227 and 232. We expect to see the bulls step in and offer good buyer support if we do make it back down into this area. But we'll need to see that 233 level break early this week before we can count on that. Dips should be buying opportunities. Look for the buyers to step in and get aggressive down here. Try and keep this market propped up here above 230 and this major moving averages and these major moving averages. Like I said, though, we still have good support all the way down to 227, so we kind of got a wide range here. But we should see some good buyer support if we get back down into this area. Like I said, though, equal distribution of volume here, showing that the bulls should try and defend this prior week's low right around 233 early next week and push this market back up here. The uptrend still remains intact as long as we're trading above that 50-day average. Look for this market to try and find support early, get a bid, and get this market rolling back to the upside as this live cattle market continues to unfold a nice little uptrend here. Over to the feeder market now. March feeders spending last week pretty much just stuck in a 5-day range. We did see most of the upside contain to Monday and Tuesday's action with a couple gap and runs early on Monday and Tuesday's action with the high of the day or high of the week coming in up there at around 359.40. Throughout the rest of the week, though, we did just kind of chop up here in about a $5 range. This market showing good support down here near 353, which was the top end of that prior week's highs range. Good support by the bulls up here, keeping these prices locked down after this impressive rally off that Thanksgiving week low. This market has shown good relative strength recently, and the bulls are continuing to keep prices held up here without any major pullbacks. As we head into next week, though, we do have a pretty equal distribution of volume here as well, so we expect to see the bulls continue to defend this 353 to 354 area. We should see them try and cut back towards the top end of this range and head back up there towards 360. Upside targets here for the bulls is going to be up here towards 370, where we got this big breakaway gap that was started back in mid-October. If the bulls are able to find support early near this prior week's range lows and 353, if they're able to find support here early this week, we should see them try and push this market back up here into the 360s and up there targeting this gap to the upside. That is the bullish scenario. If the bears are able to get some offers down here below 353 and this prior week's low, this market has been pretty extended over the last few weeks, so we could see a pullback get underway. Offers below 353 should take this market back down here towards this 20-day moving average at 345. We should see some good support there as this market has shown really good relative strength. So this faster moving average is going to be where we're going to expect to see the bulls step in and offer support. However, if they don't, we still got plenty of support all the way down here towards this 50-day moving average. This market has had a really impressive move over the last about month and a half here, and we expect to see the bulls offer some good support and keep this big picture uptrend rolling to the upside, and see this both feeder and fat markets continue higher here as we begin 2026. Look for these prior week lows to be the lines in the sand to watch here in this cattle market. Below them, either in this feeder or fat market, we could see a little bit of a pullback, but we should see the buyers step in and have a good dip to buy. But in the meantime, this uptrend still remains intact, and we still expect to see these cattle prices continue rallying here throughout the early part of this 2026 year. Next up, March corn futures on the board. Pretty quiet week here in the corn futures. We did see prices opening up down there near the range lows on Monday before just settling in throughout the next 4 days right in the middle of this range. We continue to see 435 to 455 hold this market, and we don't really expect that to change anytime soon. We have been stuck in this range here since about the middle part of October, and we don't see that changing anytime soon. Bears need to get active up here between 450 and 455. We can see here over the last couple months that this market continues to hold these range highs. This is going to be where the bears are going to start to get active. We want to see the sellers get involved up here and trade the top end of this range, while the bulls will continue to defend these range lows down here between 435 and 440. Look for the market to keep passing this. Look for this corn market to keep passing this thing back and forth here between 435 and 450. Get involved down here near the bottom or top quarter of this range. Don't be diddling in the middle, as it's just going to be a recipe for getting chopped up. Look for the range bound conditions to continue in this corn market until we can get a clear and close beyond either edge of this range. Next up, crude oil prices. Seeing some back and forth action last week. We did see some early downside as this market continued to defend that 50-day moving average here. However, the bears weren't really able to get any good follow through down here below 56. Thursday and Friday's action showing a nice snapback rally here. This market has been pretty beat down since this last big breakout we saw after the U.S. and Iran bombings. Since then, it's just been a slow, steady bleed lower as this market has just kept on pushing down here towards this $55 level, which has been the yearly low, tested multiple times over the last year here. This market had just kind of got a little bit stagnant here and got stuck here between 55 and 59, putting some pressure up here on this 50-day moving average after testing it multiple times over the last couple months. Just seeing a pretty heavy concentration of shorts down here. And with this break here on Friday above 59, just seeing a little bit of a short covering rally get underway. At the moment, though, we did see this market with a nice little breakout early, but settling back here below that $59 level. We do have the close above the 50, but if the bears are able to keep this market down here below 59 early this week, look for them to push this market back down into the mid-50s as this downtrend still remains intact as long as we don't get a close above this level. Bulls need to see more bids early next week above 59. If they're able to do that, it could cause more shorts to fold and get this market to pop, getting a nice little short covering rally underway. Any sort of short covering rally should just take us up here into the low 60s. Some of these prior lows here, we do got some leftover supply up here between 61 and 62, so that'll be the first upside target for the bulls if they continue with some follow through here above 59. But we don't see any sustained upside to stay. We expect to see some resistance step in up here around that 61 to 62 area, even up to this 200-day moving average, as that's going to be another spot that this market will start to look for to the upside. Don't look for that upside to really stick around very long. We should see some resistance up here in that area and keep this market kind of sticky down here around the $60 mark. No real big directional moves at the moment. We just need to see the bulls get rolling above 59 to trigger that short covering rally. But in the meantime, we still could see some pretty choppy action as this market has had very little volatility. And if we don't see any major breaks, we expect to see that theme continue. And this market stay sticky here between 60 and 55 bucks. And next up, we got our S&P futures on the board. We did see a nice steady week of upside here in most of the indexes. We did see a little bit of back and forth action during the middle of the week, but good upside nonetheless. The S&P putting in new all-time highs there on Friday, printing up there at 7,017 on the S&P futures. This market trading up here at all-time highs continues to be bullish. The uptrend still remains intact, and we expect to see the S&P keep on pushing into new all-time highs over the next week. We did see the Dow printing a new all-time high last week as well. However, we did see that on Wednesday before that reversal. Good support there on Thursday and Friday, though, continuing to push back up here towards 50,000. The uptrend still remains intact, and these Dow stocks continue to be where the strength is. Look for this Dow index to lead each of our major indexes higher and keep the uptrend moving. Look for the Dow to print 50,000 here in the week ahead and keep the upside going. The Nasdaq is where we continue to wait on a little bit of movement from the bulls in this tech sector. We are starting to see some good pressure here put up on this 25,009 level. Nice strong finish here on Friday, not at new highs, but definitely testing them. If the bulls are able to get some early bids to roll above Friday's high at 25,985, we should see this thing snap up here towards these all-time highs and take these other indexes with it, give a nice little boost to the Dow and the S&P as well once the tech sector is able to get back into gear. Once we're able to clear above this level, should offer good breakout opportunity for this Nasdaq and the tech sector. Keep pushing these indexes higher. Now's a good time to remain long and strong here in these indexes. The market looks strong and healthy, and we should see the upside continue here throughout quarter one of 2026. That's all we got for tonight. Thank you, everyone, for tuning in. We will be catching you guys tomorrow after the close for closing comments. Have a good night.